Ladies and gentlemen, good day and welcome to Petronet LNG Limited Q1 FY27 earnings conference call hosted by Dolat Capital Market Private Limited. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and zero on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Yogesh Patil from Dolat Capital. Thank you, and over to you, sir.
Thank you, Pari, and good day to everyone. It's my pleasure to welcome all the participants on this call, as well as the Petronet LNG senior management for the first quarter FY27 result conference call. With us, we have Mr. Saurabh Mitra, Director Finance and CFO, Mr. Rakesh Chawla, Executive Director, Finance and Accounts, Mr. Gyanendra Kumar Sharma, CGM and President, Marketing, Mr. Vivek Mittal, CGM and President, Marketing, Mr. Debrata Satkati, CGM and President, Vice President, Finance and Accounts, Mr. Vikas Maheshwari, General.
Ladies and gentlemen, the line for the Yogesh sir has been disconnected. Please stay connected meanwhile I join them. Thank you for waiting patiently. The line for Yogesh sir has been joined. Please proceed with your remarks, sir.
I request Mr. Saurabh Mitra to deliver his opening remark. Over to you, sir.
So at the outset, let me briefly take you through our financial and operating performance for the first quarter of financial year 26 and 27. Overall, I would say it has been a strong start to the year. While volumes were somewhat lower, we have delivered a healthy financial performance supported by commercial and operational efficiencies. On a standalone basis, profit before tax stood at rupees 1,514 crore compared to rupees 1,136 crore in the corresponding quarter, registering a growth of 33%. Profit after tax was rupees 1,133 crore, again a growth of 33% compared to rupees 851 crore in the corresponding quarter. On a consolidated basis too, the performance has been quite encouraging. We reported a PBT of rupees 1,491 crore and a PAT of rupees 1,137 crore, our highest ever PBT and PAT for any first quarter. Coming to the operational performance, Dahej, our flagship terminal, processed 192 TBtu of LNG during the quarter, compared to 207 TBtu in the corresponding quarter last year and 201 TBtu in the previous quarter. At the company level, the overall LNG volume process was 207 TBtu compared to 220 TBtu in the corresponding quarter and 219 TBtu in the previous quarter. As far as capacity utilization is concerned, there is an important point to keep in perspective. For the current quarter, the nameplate capacity of Dahej increased from 17.5 MMTPA to 22.5 MMTPA. So the utilization numbers now reflect a significantly larger capacity base. On this expanded capacity, The hedge utilization stood at 66% compared to 92% in the corresponding quarter and 90% in the previous quarter. Overall company capacity utilization in the current quarter was 58% compared to 76% in both the corresponding and previous quarters. So if I were to sum up the quarter, the key takeaways for us is the resilience of the business. Despite lower volumes, we have achieved 33% year-on-year growth in both standalone PBT and PAT. This reflects our continued focus on commercial and operational efficiency and our ability to deliver a strong financial performance across different market conditions. We remain focused on carrying this momentum forward as we progress through the year. With that, I will conclude my opening remarks. We'll now be happy to take your questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prabal Sen from ICICI Securities. Please proceed with your question.
Thank you and very good evening, sir. Just had a couple of questions. Firstly, what you mentioned about the financial performance being strong despite lower volumes. What has also been interesting is that the mix of volumes has changed quite dramatically, with term volumes declining very sharply and third-party regas volumes making the difference. Just wanted to understand, has that same pattern been seen in Q2 so far as well? And should we basically assume that this will be the mix moving forward, at least till the Gulf conflict is resolved in any shape or manner? That was my first question.
Okay. So yes, the pattern and trend continues as it was in the Q1 of this financial year, till so far. However, we expect the issues at the Gulf to resolve soon, and the volumes from our long-term contract with Qatar should start immediately or as soon as possible. That's our topmost in the wish list.
Got it, sir. The second question was, sir, with respect to apparent margins, in terms of, how we have performed despite lower volumes. Just wanted to understand where the margin improvement has come from, whether there is any inventory gain impact for the quarter, and, or is it basically that marketing margins or even the small amount of spot volumes that we did have actually helped offset the lower volumes? Just your thoughts on that.
Okay. Prabal, you have actually answered both the points. There is trading gains and also there is inventory gains.
Okay.
Inventory gains are at 193 crores and trading gains are at 301 crores. So that's exactly because of the higher margin and also higher inventory valuation.
But sir, will some of that then normalize in Q2? Is that a fair way to look at it? That this kind of margin trend may not sustain for the rest of the year?
You see, to answer to your question, whenever the trend has been that whenever there is a disparity between the long-term and the spot prices, the spot prices are too high and there is a big gap between the long-term prices and the spot prices, and there is a overall throughput goes down because of that. Then what happens is these trading margins kick in. Because the spot prices being high, we have some opportunities in the market to gain from the spot trading. So this can be considered, looking at the last 5-6 years trend, this can be considered as the business model of the company.
Understood, sir. If I can squeeze in one last question. Any update you want to share on the last bit of connectivity for the Kochi terminal, and any update you can share on the petchem plant? That will be very helpful. Thanks.
Okay. So, I'll first start with the petchem plant. The project is on schedule, and so far as the connectivity with the pipeline with our Kochi terminal is concerned, as far as the latest information that we have, it's still by the end of this quarter, it should be mechanically completed. That is the best information that we have as on date.
Understood, sir. Thank you so much for your time. I'll come back if I have more questions. All the best.
Thank you. Ladies and gentlemen, if anyone who wishes to ask a question may press star and one now. Thank you. The next question is from the line of Simran Kumari from Narolia Financial Services. Please proceed with your question.
Hi, sir. Good evening. My question is related to capacity utilization. Can I get the separate capacity utilization for both the Dahej as well as Kochi terminal for this quarter? And how would you expect this utilization to trend over the remaining fiscal? That's my first question.
Vivek, you can. Yeah. So the capacity utilization for Dahej was 65.62, but please do take note that this is for the expanded capacity which got expanded on 31st of March 2026. So from 22.5% MMTPA, the capacity utilization is 65.6%, and Kochi was 23.27%.
And how do you expect the trajectory for the remaining of the fiscal year?
You see, all this will depend on the opening of the Strait of Hormuz. Right now, whatever capacity utilization has been told, same kind of trend is right now going on, as we have told before. Once the Strait of Hormuz opens, then you see this Qatari volumes and the volumes from that region will be available in the market. So definitely the capacity, and you can see from the volume numbers that currently also, even if that volume is not available from the Gulf region, still more than 2/3 of that is being compensated from other parts of the world. So once those volumes are available, definitely the capacity utilization will improve quite a bit. And just to add on to what Debabrata mentioned, that actually in this quarter, the April was on the lower side. May, June things picked up. So we are actually running at the same rate at which which were in May and June. So this means that probably it should be better slightly.
Okay. Can I get the CapEx number for FY27 as well as FY28?
CapEx numbers so far.
No, not so far. For fiscal 27 and 28.
Okay. FY27, the CapEx numbers are 9,064 crores we have budgeted. And similar kind of numbers would be for FY28 as well.
Can I squeeze in one last question, which is related to gross margin? Could you just walk us through the key driver behind this improvement and what level of gross margin is sustainable going forward? That's my last question.
Can you repeat the question?
Gross margin. What was the reason behind this significant improvement in the gross margin this quarter, and how it will sustain for the remainder of this fiscal?
See, that's what I had already answered to Probal's question. The gross margin improvement is because of the trading and inventory gain, and in the coming time also, if this such kind of situation in the market is there, whereas the spot prices are higher than the long-term prices by quite a few distance, then this kind of trend could be there. With this kind of and the mix, the volume mix that we are seeing right now between the trading has gone down. whereas our tolling volumes have gone up, and more than two-thirds has been recovered from the tolling volumes only. So if this kind of trend is continued, then the gross margin will definitely show greater trading gain and inventory gain. Because that is last 5 years trend we have seen in these kind of situations. That is the business model that kicks in.
Okay, sir. Thank you so much, and all the best.
Thank you. The next question is from the line of Nitin Tiwari from Phillip Capital. Please proceed with your question.
Hi, sir. Good evening. Thanks for the opportunity, sir. So a couple of clarificatory questions. In this quarter, the tolling cargoes were brought in to offset our long-term cargoes, and our arrangement for basically the use or pay for the previous years has actually been that, if excess cargoes come in, then it will be used for offsetting that use or pay. So would this tolling cargo be treated as an offset for use or pay, because this is in excess of what probably one would have expected? It's coming in lieu of the long-term contract. Is that the right understanding?
Nitin, you are right partly, because see, firstly we must understand it depends on who is bringing those long-term cargoes. So if GAIL is bringing, they had no use of it. So then there is no question of offset against GAIL cargo. But yes, for other off-takers, if they are bringing additional cargoes, there would be some offset. But to clarify that the order of importance is the current year's commitment. After that only they can offset.
So current year commitment would basically be considered. I mean, the higher number would only be considered after considering long-term plus tolling as current year commitment, is what you're saying?
For tolling itself, see, if they are bringing more in the tolling, then the order of importance is first the current year's commitment. They have to adjust that. Then only any offset for the past year will be taken.
Right, sir. I'm just drilling down further on this. So, sir, ये basically जो cargoes हम tolling के लिए मंगा रहे हैं, right? वही cargo consider किया जाएगा for offsetting user pay, right? Long-term contract is not a part of that arrangement, right? So if
Yes, your understanding is
correct. Long-term contract, as far as the buy and selling is concerned, that is a separate contract where take-or-pay clauses are there, not user pay.
Okay.
Separate contract.
So in a way, is this the correct understanding that, if this situation continues, then this tolling cargo which is coming in can retire the user pay much faster than possibly which would otherwise have been possible?
Absolutely.
Depending on the part who had use of it. That's the only caveat I would add.
Understood, sir. And the second question is the bookkeeping one. If you can give me the Ind AS impact for this quarter at gross margin, depreciation, and in other subheads.
At gross margin level, positive is 14 crores, and forex loss is 5 crores. And other expenses level, positive 8 crores. Then depreciation 66 crores and finance cost 48 crores.
Understood, sir. Thanks so much, sir. I'll get back in the queue.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 now. The next question is from the line of Mayank Maheshwari from Morgan Stanley. Please proceed with your question.
Hi, sir. Thank you for doing the call. The first question was related to Qatar LNG more on a more medium-term basis. What are you kind of hearing in terms of the supply cargoes? Obviously, it's a bit of a fluid situation, but considering the force majeure, etc., how are you kind of thinking about sourcing these cargoes from elsewhere, as well as what are you hearing from Qatar in general around when can they kind of think about delivering some of these volumes?
So as far as firstly, I'll answer the second question. So we are in constant touch with Qatar Energy, and they are also waiting for things to improve. State of Hormuz, every day there is change of statement. at geopolitical level. So nobody has an answer that when the Strait of Hormuz will open. But the moment it opens, Qatar is, if you see certain media reports even of yesterday, that Qatar has started production. They are ramping up their production. The heat, the measurement they are doing in terms of the heat around the plant. So that level is increasing, which means production is increasing. So that was a Bloomberg article yesterday. So as soon as the Strait of Hormuz is open, we are hopeful that we will start taking volumes on FOB basis from Qatar. And Mayank, your second question was, why are we not sourcing from alternate sources? So of course, as you have seen, if we buy and then sell it, there is certain taxation implications. So directly, if off-takers or GAIL, IOC, BPCL is importing, that becomes more advantageous and more sellable in the market. So we have to be competitive in the market. From that perspective, we have given the capacity to these capacity holders to bring more volumes. And FM declaration from Qatar is on month-on-month basis. So basically, every month, depending on the situation, they are declaring. So right now, it's been declared for end of August.
Sure. And the second question in terms of petrochemicals was like, what percentage of your capex has been spent on petrochemicals till now? And in terms of completion on the physical side, how much has you been able to complete that?
Okay, so we are, as I have told, we are on track with our petrochemical project, and as per the schedule, we have completed about 40%.
And the capex spend would be roughly about what percentage of this?
So the capex, see, there is always a difference between the capex spent and the physical progress. So financial progress is not exactly, it will match with the physical progress. So that's why I have to give you a proper perspective of the physical progress of the project. I have given you the physical project number.
Fair enough. Perfect. Okay. Thank you.
Thank you. The next question is from the line of Kishan from DAM Capital. Please proceed with your question.
Hi, sir. Thanks for taking my question. One question from my end, sir. So, sir, at Dahej, we had signed a contract with Deepak Fertilizers wherein they were expected to bring in additional cargoes. So, have those started? I think around 0.5 million ton per annum. So, have those started? And similarly, at Kochi, we were expected to increase the ExxonMobil's volumes were expected to increase. So, have those volumes also increased?
Yes, both contracts have actually started taking place, and we have brought in volumes. Volumes have been brought in by both the parties under both these contracts.
Okay, and for the quarter, can you quantify how much did Deepak Fertilizer bring in? Was it like one cargo, two cargoes, or how much was it?
Two cargoes. The contract commenced in May 2026. So until date, we have got two cargoes.
Okay, understood. Also, if I could ask one more question. So any update on the tariff discussions that we've been having with our off-takers, or the status quo remains?
No, the status quo is there. There is no discussion on tariff revision.
Okay, but no discussion on tariff revision, but contract renewal, I mean, nothing has happened, right?
No, we are still in talk, discussion with our off-takers, and we still have some time. You know, the new contract with Qatar is going to start in 2028. So we are almost on a daily basis, we are meeting with our off-takers and finalizing the terms and conditions.
Okay, so if you're saying that you're meeting regularly, so can we expect like the closure to happen in a quarter or two then?
Yes, okay. You can expect.
That's great. Okay, sir. Thank you.
We can expect it to happen in the next 2 to 3 quarters.
2 to 3 quarters. That's great, sir. Thank you.
Thank you. The next question is from the line of Binit Banka from Nomura. Please proceed with your question.
Hi, sir. Thanks for the opportunity. Firstly, on your new purchase contract with Qatar Energy, which is coming up from 2028. So I think the change.
Your voice is breaking. Sorry, we can't hear you.
The new Qatar Energy from 2028, it is based on DES basis rather than FOD earlier. So how does it impact the landed cost of the gas?
It's a formula-driven price which includes the shipping cost. Of course, we cannot disclose the formula, but I'm not sure what you're looking at in this question.
That changing landed cost.
Mr. Banka, we are not able to hear you. Can you please rejoin the queue?
Okay, sure. Thank you.
Thank you. The next question is from the line of Vivekanand from Ambit Capital. Please proceed with your question.
Yeah, two questions. Number one is on the capacity that you have freed up in Qatar because volumes are not coming. How much visibility do you have of the off-takers getting volumes, and what is the logical utilization or volume that we should model for the hedge till the time this crisis continues as far as cargo processing goes? That is question one. And the second one is on the trading side. So if you can explain this trading business and also the circumstances where you are profitable on your trading contracts, and of course how to think about it incrementally, that will be great. Thank you.
So firstly, let me answer on the visibility question. So as you would have seen, Indian gas demand and government has been working on it to make sure that all the sectors get a gas in an equitable manner. So in context of that, we do see that if the Qatar FM continues, the replacement volumes will continue to flow in at our terminals. So we don't see any issue. As we mentioned that FM is a force majeure is being declared on month-on-month basis. So I cannot say that off-takers are now tying up volume for September, October. They are tying up on month-on-month basis depending on the requirement and the replacement volumes, whatever is required. On the trading part, I think this is.
Yeah, on the trading part, as we had explained before, we create efficiencies in the system, and due to that, whenever there is an opportunity, either we serve it from on the spot basis from these efficiencies, or whenever there is an opportunity, we bring a spot cargo and also cater to the customer's need without taking any volume or price risk. So in this case, as we had explained, that when there is the spot prices, say for example, very high, and the long-term prices are at a different level, and there is a low throughput from the terminal, at that point in time, with a smaller volume of spot trading also, we can protect the bottom line, taking the advantage of the market. This is what is and this we have seen since last 5 or 6 years. This is an established business model now.
Okay. Just a couple of follow-ups. So when Qatar is declaring a force majeure, now you said that the status is that till end of month they will not supply cargoes, right? So then you let's say by when do you find out that okay, in September you won't get any cargoes from Qatar, and then what is the next step? Just if you can walk me through the process so I can understand better how you are able to then talk to your off-takers and then utilize some of the freed up capacity because Qatar is not sending you cargoes.
So firstly, we are in constant touch with Qatar Energy team. So on a regular basis, we have conversations with them, and typically they are declaring force majeure at least a week before end of the month.
Okay. So it's that dynamic, is it? You get to know a week before the next month starts that okay, you have free capacity. Okay. And just to drill further on the trading gains that you make, is that linked to the spare capacity that you currently have because Qatar is not supplying, or is that the run rate that you have been mentioning, is that independent of the spare capacity you have in Qatar, or even otherwise?
It's independent of that. Vivekanand, if you see the spot trading, it's only 6 TBTUs. So for 6 TBTUs or 10 TBTUs of something like that of volume, we need not have a spare capacity. Even in the COVID, aftermath of COVID, and during the Russian conflict also, whenever there is a situation in the market was there, with a very low volume, we could generate a higher trading gain. I hope that answers.
Okay, understood. Thank you very much, and all the very best.
Thank you. Participants who wish to ask a question may press star and one now. The next question is from the line of Hardik Solanki from ICICI Securities. Please proceed with your question.
Thanks for the opportunity, sir. So what was the regasification revenue for the quarter? And in term, how much have you spent towards, again?
We could only hear your first question. The regasification revenue is 1,214 crores. And rest of the question we could not hear. Could you repeat that?
So how much till date have you spent towards the CapEx?
CapEx expenditure. See, for the year. 679. Are you asking about the CapEx?
Petchem.
In June or cumulative?
I'm talking about Petchem.
Okay. For the quarter. Petchem for the quarter is 472 crores. 470 crores around.
Thank you.
Thank you. The next question is from the line of Bineet Banka from Nomura. Please proceed with your question.
Hi, sir. Sir, for HTP plant, has there any propane contract been signed already?
Okay. Propane is a readily available commodity. So from that perspective, I think 2027 we'll enter to sign the contract. And we may have a mix of both. Yeah. Go ahead.
So this sourcing will basically be mostly coming from the Middle East, right? And Saudi city prices.
US is also a major potential source, so we are exploring all the possible opportunities.
And for these projects, sir, is there any equity IRR that you had given earlier? I think in 2023 the number was 30%. So have you done any recalculation based on current pricing?
Vineet, as we had maintained before, we have still to do certain commercial contracts. I mean, couple of contracts we have already done, like the 600 KTPA of ethane handling, and this one with this Deepak Phenolics. But then certain other commercial contracts we have to do. So we have to keep these numbers, closed to the public for the time being.
And sir, what will be the useful life of the plant? If I have to do the calculation for the profitability, what do you assume the useful life for the PDH plant?
These kind of projects generally people take a 25 years life.
Okay. And sir, another question on the third contract that from FOB to DES. So you have 4 LNG. If you have DES contract from Qatar, then what is the use of the LNG carriers? Because I think they are there for 25 years. Please.
So the carriers, most of the carriers, once the SPA ends, the carrier also time charter comes to end. except one.
Okay, sir. Okay, sir. Thank you.
Thank you. The next question is from the line of TK Nigam from an individual investor. Please proceed with your question.
Hello, sir. Good to talk to you. So, can you confirm if my understanding of the business model is correct? So, as long as that force majeure continues, you have the liberty to trade gas at the spot prices, and if that force majeure goes aside and normal business steps in, then you can again start doing business at the contracted prices. Is my understanding correct?
See, the contracted volumes, they come in and go to our off-takers on back-to-back basis. The trading business is independent of that. It depends on the market opportunity, the price at which we are buying cargoes, at which we are able to sell. And as Deborah mentioned, out of operational efficiency, we do have some LNG available. So we trade that also. So it is a mix of all, but it has nothing to do with Qatar contract.
Okay, got it. Thank you, sir.
Thank you. The next question is from the line of Nitin Tiwari from Phillip Capital. Please proceed with your question.
Hi, sir. Thanks for the opportunity again. Sir, just wanted to understand what are our tariffs right now at Dahej and Kochi for the current quarter?
So Dahej is around 69 rupees and Kochi is around 98 rupees.
Which is 98. Great, sir. And secondly, sir, also I wanted to understand that the vessels that we have on time charter basis, so I mean, are we paying the charter rates, or that's also is under the ambit of force majeure and it's not payable? How does that work?
So your understanding is correct. That's also under force majeure.
Okay, so we are not paying any charter.
I would like to clarify. That all the time charter vessels, we have suspended the operation as per, not under any force majeure clause, but there are other clauses in the contract, in the time charter agreements, through which we have enabled the suspension.
Got it, sir. Great, sir. Thanks for clarification. That's all from my end.
Thank you. Before we take the next question, a gentle reminder for all the participants. If you wish to ask a question, please press star and one now. The next question is from the line of Jayesh Shah, an individual investor. Please proceed with your question.
Thanks a lot for this opportunity. So just a quick question, sir. I hope I'm audible.
No, your voice is not clear.
Is it better, sir?
Yeah, slightly better.
Sure, I can get good. So, thanks for this opportunity, sir. My question is that, assuming things get back to normal.
Not audible.
Mr. Jayesh, we cannot hear you.
Yeah, sure. I'll get back in the
Thank you. The next question is from the line of TK Nigam, an individual investor. Please proceed with your question.
Hello, sir. Can you put some light on how much certainty or how much certain is the sourcing of alternative cargoes till the time this Middle East conflict continues?
The sourcing is actually being done under the tolling contract, service contract by our customers. And as per trend, whatever we are missing from the Middle East, actually more than 2/3 is being brought by these customers. So we hope that this trend will continue, and we are seeing that this trend is continuing right now.
Okay, sir. That answers my question. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question from the participant. I would now like to hand over the conference to management for their closing comments. Thank you, and over to you, sir.
Okay. Thank you. Thank you so much for joining us once again, and we will continue to keep in touch through such initiatives. Thank you.
Thank you. Thank you, everyone.
Thank you. On behalf of Dolat Capital Market Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.